Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I've posted the chart of the May wheat. And folks, this is the chart of May wheat. We just went below $6 a bushel today. A second day, actually, in a row. We bought it yesterday at 95 and ended up making a tiny bit of money, 5 cents in the room, and then we decided to wait and see what happened. Of course, you can see it's going down a lot lower. This was done over a week ago. You can see that the low that we were forecasting at that 1.618 expansion was 666. The low was 667. And what we're looking at is that this move right here has the same characteristics as this move right here. Remember, in June, wheat was trading for $13 a bushel, folks, and it was out of wheat. There was no more wheat to be had. And look at it now, half the price, and nobody wants it. Isn't that an amazing statistic? I think I have to love that. But you can see where we are right now. Now, all I'm going to do now, since we were talking yesterday during the trading hour, we talked about the AI and what things were going on. So I wanted to show you what the forecast is. Now, please do not buy this because this is a very, very high-risk trade. I mean, you have to risk as much as 4 cents on this. So take a look at it. You'll see that it went right down. There's the right near the low of the day, right near that 666. Misses it by quite a bit, about 3/4 of a cent. And that says the market might rally towards the end of the day. Now, that doesn't mean it's going to rally all the way up here. It just means that maybe that will hold. But frankly, I think it has a very small chance of holding because they're banging up all the grains, and it's just a matter of time probably till they get to that. Now, the first chart that I posted here yesterday or today is really important, folks. Let me get this up. This is going back over 35 years. Let me get this up here. Oh, shucks, I hit the wrong button again. A little bit of what we call day trading lag after yesterday. Had so much fun yesterday. Of the 5 that I've done, that was the easiest one I've ever done, folks. Honest to God, with the blink of an eye, the 5 hours was over. I didn't even get to finish one of my PowerPoints. I had to hustle through it, but we had a really good audience. They seem to like it very nicely. But folks, this is the 2-year and the 30-year inversion. Okay, this is the inverted yield curve. You see the ABCD up here, this really big ABCD structure. That's when they were telling us about, guess what? Negative interest rates. Gee whiz, anybody that fell for that, oh my goodness. Now look where we are, folks. We've taken out the lows going back through 89. We've taken out the lows of 82, and that's where the bull market started in bonds. You know that? Back in 82, bonds were trading at 50 cents, not at 125 where they are today. They were at 50. You know, T-bill rates were 14%, muni bonds tax-free, 16% for 2 years, and of course they were called away. Something big is happening here, folks. I don't know exactly what it is, but something big is really happening. Now, I mentioned on the beginning of the show here that the collapse that we've seen in the Russell index the last several days is very, very, very important. Unfortunately, the chart that I had for it dissolved somewhere, and I mean that sincerely. I do not know what happened to it, but it flat out dissolved. And so what I'm hoping is that we will get maybe get it up by the break when we get one for that. But we've had some pretty big moves today in the market, but I want to show you what this means with the banks doing what they're doing. This is the chart for the KRE, which is, and I got this from one of our, just a second, I'm bringing up a new one now. This is a chart, a KRE, which is the ETF for the regional banks. And as you can see, they've been in a bear market for well over a year. And now we've had the 3 lower tops. That's a 135 pattern, folks. just like this one is a 135 pattern. And you'll see there it is, and we gap down today with a big move to the downside on big volume. That means something, folks. Either money's getting scared or something else is happening that we don't understand. And since I'm a technician, all I do is look at it. We just got a chart not more than 10 minutes ago from one of our friends out in the Valley of the Sun, the Valley of the Wind, also known to you folks that don't gamble as lost wages. And here is what Mr. TV showed us with our good friend Jamie Dimon. And you can see here the price of his JP Morgan gap down, gap down, gap down with big gap down. Something is going on, folks, so pay very, very close attention to it. Now, today was a real interesting day in the stock market because we had made new lows in the Russell yesterday, and we've made new lows again today, but we had a humongous rally today in the S&P 500, folks. It was a really big one, and let me show you what that rally did. We talked about this all day yesterday for 5 hours. I made some converts about the 382, and that's what my job was. Anyway, there was a 382 at 40.18, and by golly, it's a lot lower than that now. I just saw a print there at 40.85, still higher, but the Russell has taken all of this out. So has the Dow Jones. The only one that's above it now are the Russell. Excuse me, the NASDAQ is still up. It's acting the best, and the second is the S&P. Third would be the NASDAQ, and then let's get it straight here. The NASDAQ is the strongest. S&P's third strongest. Fourth strongest is the, I can't remember. I guess it's the Russell. No, the Russell's the weakest. And the Dow Jones is the third weakest. So we got first NASDAQ, second S&P, then the Dow Jones, and then the Russell. Russell is the second largest of all of those because of the open interest. So that's really a big deal. That's what I look at. I don't know if that means a lot or not, but that's what I'm looking at as I see some of these things unfolding today. One thing that I think is important that we also remember when we look at currencies, and I'll show you one this morning that was set up because this is this dollar yen that we've been watching for a very long time. And those of you that like AB equals CD patterns, you'll be able to see that we had a perfect ABCD there this morning. We've had a pretty good rally coming off of that. We're up into this area right here. So it's also telling you that something is happening in the risk reward, what they call it, risk on, risk off scenario that these folks that do these algorithmic trades and all the other stuff that's going on. So I think that, so if you have any questions, it's 877-927-6648. And what we're going to do is when we get back from the break, I'm going to do my very best to pull up a chart of the Russell so that you can see, what we're looking at when we're looking at the Russell. Well, that'll take me a little bit of time, to pull it up. We also have to review what's happening with the 382s on these other things like the NASDAQ, the E-mini S&P, and also, we already did that one, and the crude oil, and also the gold. I mean, all of them are just really amazing. And I'll post those a little later. Fact is, I'll post the NASDAQ one this morning because it went all the way up to the 61% retracement. But all of them hit the same, different Fibonacci numbers, 382 in the S&P, 618 in the Dow Jones, and also in the E-mini S&P. Hello, operator. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted a chart of the Russell. I just want to show you how bearish this is, folks. Today, the E-mini S&P made the 382 of this move right here. Okay? Unbelievable, right? Now remember, this was the March 3rd low, okay? What the S&P did from this high down to here, it made a 382. Look at the Russell, folks. It can't even make a 382 of the high 2 days ago. Look at that. This has just been, and look at, we're breaking down. I mean, we're going to, unless it stops somewhere in here, I mean, this is really negative. And we're seeing it, you know, we got I just heard the S&P was just trading at 39.75. If that thing ever goes below 39.38, and we've done this already, there's the 39.28, 28, not 38, 39.28 in the S&P was right here. So you can see what's happened to the Russell. Okay, that's not a very good sign. Now you're also seeing the fact that the market that should be going down is the one that's actually holding up the best, and that is the Treasury bond. All it's doing right now is making a retracement, just about a 61% retracement on the long-term weekly chart. Let's get this up here so the folks can take a quick look at it, and we can talk the same language. We'll get it up here so you'll be able to see it. We hit it just yesterday right on the money. In fact, that was one of the trades we were looking at when we were talking about the trading yesterday. Early in the morning, we got right up here to 126.11, and the 61% retracement of that move right here was 126.12. It missed it by one tick. And it was, of course, during the time when Mr. Powell was giving his speech, and I said, well, no sense taking the risk for you guys, so I sold it at 26.08. Worked out really nice. It broke down more than a point and a half, but we had a couple others that were in there. We broke even on several trades because I was, you know, basically when people listen to me for that long and ask so many questions, and I loved them, folks. I've heard these questions before, but I love answering them because it means that people are interested, and we had a lot of interest, and that really made my day go real easy. Now, here's something that's really important, and it's from our good friend, Mr. John Jameson, and he understands crypto. And those of you that been following us, you know, he's been waiting for this break here in crypto. He believes that the Bitcoin will probably get down somewhere around 12,000 to 10,000 here in the next month or two. But this is Silver Lake. This is a big deal, folks. This used to be a $270 number. You had a beautiful, look at this beautiful ABCD right after they became public, I guess. Look at that. Perfect ABCD right at the high. There's your first Gartley, perfect 61% retracement. Uh-oh, Johnny's raising his hand. He said, I see the 382, and now we're trading. It's lost 50% of its value today from 4 to 2. That means 2 is going to 0. This is tapioca, and the people that have their money in it think they're going to get it back. I have some really sad news. If you look at what happened to Sammy Blankfein, or whatever his name was, that doesn't happen, folks. There is a law on the books. It's called the Dodd-Frank law, that they can actually go in and go back and what they call there's a special word for it. Anyway, they go back. Oh, darn, I just had it on the tip of my tongue a little while ago. Anyway, they can go back and say, hey, we're going to back here and say you did this 3 months ago. You had prior information, and so we're going to bust those trades that you did 3 months ago. They can actually do that. And if they do that, folks, it's lights out in the financial section, because risk will not mean anything anymore, and that's it. But anyway, you got to be real careful, folks. As much as I love that wheat vote, if you don't put a stop in, folks, they're going to get you someplace, one or the other. That's basically the bottom line. So if you don't use that stop, you're in really big trouble, and you don't want to be in big trouble. That's no fun at all, okay? So remember this. This is going to go to the history book, Silver Lake, from 240 down to 0. And look at all the times that you had a chance to get out of it. You could have got out at 105. That's it. But we've got other stocks that are holding up incredibly well. NVIDIA was making a new high. Even Tesla, even though it's down a little bit, it's gone from 109 all the way up to 225, which was the 382 of the whole move. So all of that's important. Now, speaking of 382s, if you like 382s, and we certainly do, we showed you one in the E-mini S&P, and we're going to show you another one right here, which happens to be, and it's making new lows right now as we speak, is none other than Mr. Crude Oil. And we spent probably a good 2 hours on the 382 retracements yesterday, and we had a whole bunch of them that were just coming on spot on. But look at that, 20 pips above the 382, and it's already made well over $1,400. And if this is an ABCD, then that's going to be really something really amazing here. Now hold on a second, because I am hearing a beeping sound, and boy, they're really getting to it now. 73 in the S&P. 73 is what it be. Looking good, Billy Ray, feeling good. Let me show you something, folks. We talked about timing and stuff when we were doing the show yesterday, and I want to just give you a heads up, because the same thing I do the same thing every day. It's just boring as heck, but sometimes it works relatively well. And here's what we were looking at this morning. This is the Dow Jones E-mini. Let me get it up here so you'll be able to see it. And this is basically the AI program. I showed the folks how to do this themselves. And I gave them 3 examples at random. We took crude oil, gold, and the S&P and showed this, and there it was. They said, oh, my goodness, can actually do that. And guess what it did today, folks? Exactly the same thing it did yesterday, with a time difference of about 15 minutes. So that's why that's so important. So bear with me. Something's going nuts here, and I have to turn it off. And wow, the E-mini is really getting hit hard here. We're down to 72. Shut the front door and raise the rent, Ruby. Let's see what's going on with some of these other things that we're looking at. Well, the wheat's still going down, and we're probably going to, we're making down. We're almost to the wheat here. If we get below 663 in the wheat, folks, you might never be able to, they're going to be giving wheat away. You won't even have to buy it. Just go to the store and pick it up for free. Hold on one second here. I have to turn off these limit minders because we're doing good. Now, here's an interesting trade for you, folks. If you like patterns and you like Fibonacci numbers, I'm going to give you one now. There's no guarantees, as always, but it's a biggie. It's the Big Daddy Rabbit, none other than Mr. T-Bonds themselves. And here it is. Hold on. We got to draw the less ones in here and get it up here. and show you where we're probably going to be. And here it comes. 1, 2, 3. Give me a break here. We're almost ready. Okay. Okay. There's this, we're right at just a tiny bit above the 61. There's your ABCD up here at that level. This level right here, folks, this level right here is the 61% retracement on the daily chart. And what's so amazing, folks, what's so amazing here is the notes, the 10-year notes, should be way above here like this, but they're not. They're way down here. Something is going on in the market, folks. Somebody's getting scared and they're not telling you. Take a look at these stocks. Look at Goldman Sachs. Look at JP Morgan. Look at the bank stocks. When the banks turn your money away, that's not a good sign. Let's take a break. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I'm going to update the Dow Jones trade. Now, we sent this out for the S&P last night early when the market was trading at 39.80, I think, something like that, and said to look for 382 retracement. And of course, we got it. It went to 40.16 was the 382, and it went to 40.20, and now we're substantially below that now. But look what this forecast is saying now in the Dow Jones E-mini. You see, it should be bottoming here in the next 20 or 30 minutes, and you want to watch this number right here, this 1.618 number. That's the real key number. Let me take a quick look at that from so I can read you what that number is. It's 32,600. oh my goodness, it's only 26 pips away. That's not very much. So if we start going below 32,600, folks, after 1 o'clock, that would be 2 o'clock. After 2 o'clock, that's going to be really nasty, and you're not going to see a happy Friday with that jobs report that's coming out there. If somebody knows something ahead of time, if you don't believe that they know what those numbers are, you're being very, very naive. So just remember, folks, you got to protect yourself, and that's the main thing. But here's what we actually sent before it happened. Of course, we didn't have the pattern in, but we had the price levels in because we were looking at the 382 in the S&P last night. And believe me, I was very tired when I sent the darn thing out. I had a couple of mistakes in there that people caught, but they saw the patterns and they knew what we were looking at. But there was the 382. Remember now, the NASDAQ went all the way up to the 61% retracement, and the Russell couldn't even get any higher than the 382 of that day right there. I mean, that's how bearish the Russell. That gives you an example. You always want to sell the weakest and buy the strongest. Okay, that's the main thing that you're looking for. So let's keep that in mind when we're watching some of these. But remember, it only works about 60% of the time, and it works right away. In other words, if we get down here in the next 30 minutes and the market is continuing making new lows below 326, 32,600, let's try it again, 32,600 in the Dow, then we are going to go down lower on the day, and we are going to have what we call a nasty Friday. And that is not a good thing, especially on a Friday coming up into a weekend. Not very much fun at all. Here is the E-mini today, folks. And we just want to give you a heads up that how these things work. And remember, you'll see where the prices are now compared to where they were when I posted this to show you, what we were looking for. See, once you have that big, strong downtrend, you want to start looking for 382 retracements. And, of course, there it was right there at 96. I think that was 96. Yeah, right at 39.96. It's already 20-some handles below that, and your risk was very, very small. So those, you can't predict all of them, but, like they say, you're going to get some of them, and even the blind squirrel, picks up an acorn every once in a while. That's a key to some of the things we're paying attention to. I already showed you the crude oil one, and it's making new lows also. And I think I gave you the one on I didn't give you the one on the gold. Let's take a look at gold, because here's one that we highly recommended. And let's get this up here so we can see it. Again, this one's made a little money, but still doing pretty good. This is what we were watching here. We thought the gold would get up to this level right here. Okay, it got a little bit higher. Our stop was just above the 50%, and now it's trading down into this zone right now. So that's all that is. A very simple pattern. Works great. Basically, I got the idea of watching Tom Hugard trade, and he's a pretty smart dude. So and he presses like crazy. Today, he's going to have a bonkers day because as the markets start to go lower, he usually follows them down. Quite a bit. We're at 64 in the S&P, and we're below the. We're right at the magic time now, folks. 32,600 is as we speak here. Let's watch this for a second. So, oh dear, we just hit 666s in the. That was our number, folks. We just hit 666s in the wheat, and that was a number that I'd put out here. Oh, that's very sad. To have the right number, you'll be able to see it here as I bring it up here. It's the frustrating part of the business, folks, not having the belief in what you're doing. I had the belief in it. It didn't have the darn patience, but, we made other things that this one just not going to work. You can see we got right down here. This is where we are now. And with the whole world getting hit, this isn't going to stop. So it's going to go lower. How much lower? I don't know. But what I have a hard time telling people or explaining to people, how can wheat be so valuable in June, okay? In June of last year, right? In June, it was $13. Now it's $6.66, the sign of the devil. Are you kidding me? Holy moly guacamole, that's a big deal. Anyway, that's what we're paying attention to here today. Next week, I believe, who do we have on? Next week we have Stan Harley, and I believe Mike Moore is on vacation. He'll be back later. We'll have Bill Meridian the following week. And I'm still trying to get Peter Elides, but Peter's on vacation right now. Most people, start taking it in the springtime and stuff, so that's really good. Remember, folks, what you're seeing here in these banking stocks in all the banking stocks, the regional stocks, J.P. Morgan, Goldman Sachs. Something is not right. Those boys, they have information that we don't have. And so let's remind ourselves that that's where we stand, and so we should be very, very careful of what we're doing here. We're still sitting right there at 32,600. We got another 20 minutes here. There's a chance it can still hold together, but it's a little bit hazy, as they say in the trade. So we're going to do one thing at a time here. We see crude oil is now making new lows on the day after being up to the 382 up there at 77.88. It's now 76. Wow, that's a $2,800 move. No, $1,800 move in the crude oil today. So these are moving along pretty good. The only one that's not really going bonkers was our gold sale, and it's basically back to break even. And also the gold, the Treasury bonds are getting really close to. I have to show you this number in the Treasury bonds, folks, because this is really important. How bonds could be here with the rest of the world falling apart. And it's really amazing. This was yesterday. Okay, because we were talking about this yesterday, and it's still important because we're just rallying back to the 78% level here. Now, just want to give you an eyeball here. Remember, this was the low. Okay, we have a nice rally right back here to this level right here, right exactly at the remember, this was the big 786. There it is right here. Rally to the 618 of this one right here. Now this is happening while notes can't even take out these highs. And notes should be the leader. That means that money is getting tighter than people think it is. And when the Fed comes out and saying, we're going to raise rates till the cows come home, well, he didn't quite say that, but he says we're going to do this until things get done. And I don't know what's going to happen. You know what I say? Okay, it's just, I know it's my fault. I keep switching charts and it's making a problem. Sorry, guys, just a minute. I keep forgetting that I got to do them one at a time. And anyway, this is what's really important, folks. If we can get Treasury bonds here up above this 127 level, then that means that interest rates for short term will be going down. Now, remember here, when you see prices going up like this means interest rates are going down, and yet interest rates are going up and bonds are going up. That may mean there's a flight to quality. If you can equate bonds to a flight to quality, then more power to you. But anyway, that's what I'm looking at. Let's take a break. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're looking at the E-mini S&P on a 4-hour chart, and all I want to do is to show you the low here of March the 3rd. Okay, now we just hit, just a minute ago there, at 39.60 was the 39.58.5 was the exact 786, and we're right at a time. The AI says it should start to turn. I've already said this should be the time, and this is it. Now, in the next 20 minutes, if we're making new lows below 39.58 and below 26,000 or 25,578, in other words, making new lows on the Dow Jones, this means that the AI is no longer working, and it works best the first 3 quarters of the day, because by then you've gone through 220 bars out of the 280 some bars during the day. So you're 3/4 of the way through the day, and so as you farther out you go, the less predictive it is. It does really good with the first half of the day. Some days it does it perfectly the whole day, but that's a rare event. That only happens about 40% of the time. The rest of the time it's really good the first part of the day and chops around the second part of the day. So it's a timing tool that's made for shorter term, but if you know how to use it, it does give you a little bit of an edge, and sometimes a pretty good edge. So I hope those are the things that you're going to be looking at. So anyway, we hit our low with the exact 786, folks, was 39.58, and I think we hit 39.59 was a low, I think, in the S&P. I can't see exactly, but that's what we're standing now. And if it is correct, we should start to rally here. But like I say now, if it makes a new low, not good. So you don't want to mess with that, okay? And by the way, I know some of you people probably bought the wheat down there at 666, the sign of the devil. Folks, you risk 4 cents. If it goes to 36.62, sayonara, you lost, and that's pretty much it. So that's basically, what we're watching here as we go through some of these charts today. The key to take away here, folks, is the fact that the Russell is so very, very weak, and being the second of the stock indices futures, and when you add that with the regional banks that are part of that Russell index, it's telling you that there's some things out there that the Fed is not telling us. And we got this report coming in tomorrow, always a lot of fun on Friday, so that'll be something to look at. But the main thing now is to watch that that number tomorrow, and it's going to be a really, really big one. Now, I wanted to show you, since we were looking at the index for the regional banks, I wanted to show it to you on a little bit larger time frame, because you really should get a bigger picture other than that short picture, which is only a year. This goes back several years. You can see from our low back here, COVID time, and then we have the move. And look at the 61% retracement, how all the numbers are coming in. That means the banks have about another 12 to 15% to get down to this level where there'll be a very, very good buy. Now, I don't know, nobody else does either, where this is going to come in, but we need to be watching. If you trade the banks, I don't trade the banks, but if you do, watch that. That's a very nice pattern in here. And they trade very nicely off the ABCDs. You can see the ABCDs here, beautiful ABCD right here, and then you have the big move up. You see the gap up right here? That's one of the signs that tells you that your A, B leg, okay, the CD leg is going to be many times that. And as you can see, it just keeps going and going and going. It probably goes 3 times. Instead of 1.618, it goes up to 3 and then backs off. Then you have the other ABCD. So it's a very publicly traded stock. People, must love it because it follows the numbers pretty nicely. And that's what we're trying to do here, is to find the ones that will work the easiest. And that's pretty much it. Now, since we're at such a critical time of the day, I'm going to take if there are any questions, 877-927-6648. And I wanted to double check to see, what the markets are doing, because if we don't churn from here, because we're right over the time where we should be getting ready to, move to the upside. And if we don't, then that's where the real problem will lie. But we should start up just about any time now if it's going to, and we'll see. But remember, the number is 39.58. We've been to 39.60, I was told. So we're only 2 points away. So watch that number. Going to be very, very interesting to watch it unfold, the way we're looking at it. So it's going to be quite interesting here. So hold on 1 second here. I have to do a little tiny housekeeping, which means I need to do something here that will be pretty easy. I got to do that and that, and I think I'm okay with that. All right, just want to make sure that we are all right, and then we'll be okay looking at what's going on. All right, let's going on. Oh, regarding the cattle market, some folks have asked me, we've been bearish cattle for quite some time. They went against us for 1 day, and then they came back really strongly. I'll be happy to show you that chart, but it is another one of those that it's just gone up to that level and held for such a long time that it just really gave you a really good chance to get short up there at that 166 level. And I think you're getting ready to see a pretty substantial break here in the cattle, because they have been going up basically uninterrupted, for the past 30 days without much of a correction. We've hit 166 3 times, and every time it hits it, it keeps backing off. So those are another one that we need to be paying close attention to. There's a lot of things to pay close attention to. I think that's why we were so busy yesterday during the live trading thing that I just, folks, once I got started, I don't know what it was. I don't even remember the time going that fast ever, because I was shocked. When I looked up and I said I have 5 minutes to go, I was in the midst of giving my last of my PowerPoints, and I had to hustle through that. But the questions were the thing that were really fun, and the responses that people emailed me really makes my day, folks. That's a lot of fun, to see see that stuff unfold. People start to understand it, and it makes it really, really nice to see things, unfold like that, which is really a great deal. Whoa, boy, we just got hammered here pretty hard here. Well, we're right at the time right now, folks. So did we hit? No, we went through the 382 like it didn't make it, like it didn't even exist. Boy, I'm glad I did that one. Anyway, this is looking pretty bad now, folks. It's got to stop right now. Let me show you what I'm looking at, because I don't think it's this accurate, but it might be. I don't know. Let's just take a look here. We'll see where we are. Yeah, this is the number right here. So let's take a look at it, and you'll see what we're watching. And hold on, we'll get this up here. Remember, it's only right about 60% of the time, so pay attention. Here's where we are. It's either going to melt down. Now, right now, if 15 minutes, if you are past this level right here, that means that this thing is going to go down and go down. It is going to go down hard, folks. Even this little bounce, if we do get it, is not going to make very much difference at all, because of the fact that it just looks so very. Look at the Russell. It's trading at 1841, folks. My goodness, I just want to show you on a daily basis how bad this looks. Give me 1 second here.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I've superimposed on the top is the E-mini S&P, and the bottom is the Dow Jones. The green line is the artificial intelligence prediction of what should happen. I didn't go out to the rest of the day because I want to show you the importance of where we are right now. If in 15 minutes from right now, it's 2 o'clock, by 2:15, if we're making new lows, we're going to go down today for the rest of the day, and Friday is going to be really bad. The reason why is because it's breaking all support. We've already broken support in the Russell. However, the Russell is setting at a 50% retracement of that last low that we made way back in December. So, you know, it's gotten hit pretty hard, but it may reach that support. So that's why, you know, it's so doggone very important that it does that. Because if it doesn't hold that support, and the timing is going to be the key thing to watch, is because if it doesn't rally, that tells you that there's more coming to the downside, and that's the real important thing to to realize as you're looking at some of these today. So anyway, the wheat is what we call a historic trade. Looked the best of any trade I've seen in a long time, but by golly, should have been buying it today right now, but I bought it too early, and so I had to sit with some pain. But fortunately, the pain was mitigated by the move we had in bonds and the euro and gold and the stock indices and crude oil. So that always helps. So we'll see what's going on, but it's really interesting here to see that we've done that. So very, very interesting as we go through here right now, and we'll find out what some of these things are doing. Okay, those of you that have an interest in the currencies, take a look at the euro. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow.